What if the future of mortgage lending combined consumer direct call center origination with your traditional retail loan originator? Is that even possible? Can the two coexist? Is there a possibility of a happy marriage? We would call that a hybrid originator. And in today's episode, we're going to discuss, can a hybrid originator actually work? Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Yo, what's poppin'?
Well, I promise not to ramble as much as I did on that last episode.
You're just passionate or something.
Yeah, I am passionate, and I'll tell you this.
That does not invite you to ramble again. That wasn't an invitation into you to ramble again about when you're like, here's it.
Here's the deal.
Oh, God.
My mom's a rambler. I'm a rambler. My dad is a rambling man.
Are they really? Do they ramble?
My mom rambles.
Really?
Yes. Drives me up a fucking wall.
Mama Owen rambles?
But guess what? Then I'm like, damn it, that's where I get it from. And then I'm like, you know what? I'm like, oh, that's how other people feel around me.
Very good.
It comes from a good place. We're good people, John.
You're passionate about like whatever the hell you were talking about.
I overshare. God forbid you ask me how you doing.
Don't ever.
Unless you want to know the real answer.
But I don't ask people that.
That's what
I just fucking head down.
I still give it to you.
Head down, blinders on.
Yes.
That's what I do. To
yeah. No. Look. The last episode, if you didn't tune in, it was my way of trying to discuss housing, real estate, and mortgage post-election.
Mm-hmm.
But the issue is this. Please know we try so freaking hard to be neutral that I slowly pick my words, and sometimes it's not a linear line. Like I'm going from point A to point
you're
B.
You're walking on eggshells, but with AI, and people are going to chop it up, and you already said they're going to be like, they're going to make you say what you didn't say, sir. It's too late.
Yeah, well, please know, yes, I'm walking on eggshells. I'm avoiding landmines, potholes, and hand grenades. I
run on them shits like it's Call of Duty 6. And I'll respawn right next.
It's funny. Every Friday, if you follow us on Instagram, by the way, the handle is @the Loan Officer Podcast. You 100% should be following us on Instagram if you're not already. But what you'll notice is we got into this cadence. And shout out to our intern, Jacqueline.
Shout out, Jacqueline.
But every Friday, I tend to do a green screen video. It's my favorite thing to do. It's basically me offering commentary to something that was written in the news. Well, a couple Fridays ago, I literally did one over an article that basically said, does a Trump presidency bring us 8% interest rates? Normally, this is not a brag, it's just the truth. I can knock out one of those green screen videos in 8 minutes or less. 2, maybe 3 takes. They're a minute long, screenshot it, frame myself in there, hold my thumb on there, and just wind up and go. Dude, for that one, John, 28 minutes, 18 different takes, 2 different sessions. Because I tried to get it done in 8 minutes and I was late to an appointment. I had to wait till the end of the day, and then it took me the extra 20 minutes to get it done. But I'm glad I did it. You want to know why?
Because you did it?
Over 6,000 views.
Go.
Like we have 6,000 followers. It's not like we have 60,000.
Yeah.
I always love those dudes or those girls that have like 60,000 followers, but I look at their reels. I'm like, you only get 800 views.
Correct.
Probably because they're all bots that are there, which we have 6,000 followers and still had over 6,000 views, which obviously that particular green screen reel outperformed 3-1 our standard reel. But when you listen to the previous episode and I'm rambling because I'm doing my damnedest in order to not piss off anybody, for me not to be slanted or biased.
That's not,
and that's why that particular green screen reel took me 28 takes, because every time I would say something, I would delete it because like, damn it, you may sound a little bit slanted or biased in that.
I want you to reach a level of success so great, Dustin, that people will come back to episode 490 of TLOP and try to frame you for some bullshit you said on a podcast. I hope you reach that level of success.
Do you?
Yes. Because
are you going to pay my attorney bills?
No, but you'll be able to afford them because you don't give a shit. We'll be out on a yacht in Fiji like you've been prognosticating for the past 10 years.
I would love to be on a yacht in Fiji. Can you make that happen, John?
We are on the trajectory to do so, Dustin, because you are providing ultimate value. You're giving loan officers the value they don't get from their branch managers. Do you know why? Because they work for shitty companies.
Ooh, I wouldn't say that. I wouldn't say that, John.
I mean,
they don't necessarily work for shitty companies.
You work for shitty people because it's not about the company.
Shitty's a strong word, John. Maybe their branch manager needs to be coached.
Your branch manager is incompetent.
Nah, how about
I'm 0 for 3?
Uninformed.
Stupid.
Uninformed.
Ignorant.
Inexperienced.
Not educated.
All right. No. I love the segue though, right? Good, yeah. Like, look, if you want to see John and I
do this in live in real person.
Be on a yacht in Fiji. If you want to support our dream.
Yes. If you want to support our dream, please.
You know what I wish we could do?
What?
What if we could just take donations? Wouldn't that be easier?
I mean, you can. It's through Patreon, but we're not.
Like, can we not do that?
I think we can.
Like, how about it's like, look, if you like this episode, you give $1. If you thought this episode was average, you give nothing.
You know,
and if this episode banged, give us $5. What if we did that every single episode?
We'd be no better than the man trying to wash my windshield at a red light on OBT.
You think so?
No, so the fuck,
man. I don't know. I'd love to see it. I'd love to see it. Anyhow. Instead, because John's not willing to do Patreon, because he doesn't want to be the guy that's washing the windshield on the corner of Gore and 50.
So you know. So you know. Dangerous intersection. Yeah. If you're on Gore, yeah.
Yeah, I guess it'd be Gore and OBT. It would not be.
Windows up. No.
So today's episode is totally inspired. Shout out to Chris in Detroit, Michigan.
Okay.
It literally is inspired by a conversation I had with Chris yesterday. Chris is a T-lopper. Chris reached out. He's entertaining LO Launch, right? LO Launch is our real deal, Holyfield, in your face, 16-week program for mortgage loan originators who are looking to launch their career. Maybe they're not quite yet funding 4 to 6 transactions a month that are all self-sourced, but they don't want to mess around. They don't want to play games. They want the info. They want to be held accountable. They don't want to be assigned homework, and they want success now. Okay, so Chris is looking at that. So, but Chris has been a listener for the past 2 years. He and I connected on LinkedIn. I have him talking to Nikki about LO Launch, but in the interim, he had questions that I was like, you know what? Instead of us typing back and forth, dude, what's your phone number? Let me call you. So he's one of 3 T-loppers I talked to yesterday.
Oh, shit.
Literally, I called Hawaii, I called Seattle, Washington, and I called Detroit, Michigan. And all 3 were me responding to T-loppers. And when Chris and I hung up, I knew that you and I were doing content today. And I was like, damn, I need a really good podcast episode. And he inspired me.
There it is.
Yeah, because here's Chris's deal. Chris, currently doing a really good job, making a name for himself at his company. He works for a top 10 lender.
Yep.
Very reputable lender. One that I respect. One that, if I hadn't found lower, I may have entertained working there. If they had an opportunity for me. I'm not saying they did or didn't, but if they did. Nonetheless, he's like, but he's really involved in consumer direct. Like, that's what he does. That's his jam. But he wants more for his career than just working consumer direct. By consumer direct, that means his company is spending money generating leads, and his job is to work those leads, turn those leads into pre-apps into pre-approvals into applications and fundings, and life goes on, right? We had Lauren on our show, was about a month ago now, right? That Lauren hopped on, and Lauren's now my colleague at Lower. She's up in Ohio. And Lauren had successfully worked for 9 years consumer direct. Then she transitioned into retail. And as a retail originator, she now crushes it. She's a top producer. She's winning awards and has the big fat checks and the pay and the 401k and the W-2 to kind of show it, right? But Lauren went from consumer direct to I'm cutting that off and I'm jumping into retail. I got a buddy, Brad, right? Brad's in the DFW, right? So Dallas, Fort Worth. He worked 13 years consumer direct, then woke up one day and said, I'm tired of doing that, and took the leap of faith and went into retail. So Lauren and Brad, although have successfully transitioned, they didn't do the hybrid. And the hybrid is, what if I could do both? And the hybrid is what I want to talk about. Because this conversation I had with Chris was one in which I'm like, I wonder how many other people may be trying to solve for this. I wonder how many other people have attempted this, or how many other people are going to want to attempt it. And let's at least go ahead and create some content and put some thoughts out into the universe to help point people in the right direction. So today's episode is going to be all about how we could potentially live in a world where it was a hybrid originator, where a good deal of their business came from leads that were generated on their behalf, and a good deal of their business was leads that they generated on their own.
So question for you before you get started. If I worked in consumer direct, basically I was a head site jockey, as you call them, and I worked in a cube and I was like getting fed leads, mortgage leads, would I not be allowed then to like go out and like, say I was talking to my cousin, like, oh, I'm interested in like buying a home. I wouldn't be allowed to like take their app. I couldn't like put them in the top of my funnel even if I worked in consumer direct.
No, you could.
Okay.
You 100% could. The issue becomes this. When you're working in a consumer direct environment, are you learning this skill set that would be needed in the retail environment? And then are you supported by your managers? Because in order for you to go build out your own personal brand and for you to generate your own referral sources or create your own referral sources, it takes time. Like it takes 6, 9, even 12 months. So that's going to be time away from that headset, time away from the sales floor, and time that you're not working the leads as they come in. Like, so that would be your employer's concerns. Like, no, John, I hired you to do one particular thing and I need you doing that one particular thing really well. Your counter would be, but how cool would it be if I was able to generate my own leads and bring them in? That's less money that you have to spend on marketing and advertising. Or it would be one in which that's more volume we can generate off the same dollar amount of ad spend. And then when this came up with Chris, something I brought to Chris, I said, well, Chris, because he was like, dude, can I do hybrid? Is that possible? I'm like, yes, I know it's possible. Or I think it's possible because, and I purposely wore the lower gear today because one of the things that attracted me to lower, like first and foremost, it was Dan Snyder and Mike Baines. It was Dan Snyder, Mike Baines, the team that they had put together, the money they had raised, and the vision that they've cast for the future of mortgage lending and the vision they cast in terms of this company's in hyper growth mode. So like we literally are stating out loud for all to hear, we want to help loan officers and branches become top 5 in their market so that collectively we can become a top 5 lender nationally. We don't need to be number 1 or number 2 or number 3, top 5, because we want to be the best. And being the best is sometimes doing things that's never been done before. It's offering services that other companies hadn't thought to offer as a standard operating procedure. That is what attracted me to lower over one of the other 11 opportunities that I had. And one of those opportunities was stay at my current employer, right? The company that I helped build, I could have stayed there and done various roles for them. But I was like, no, I want this company because I buy into Dan and Mike, because I buy into them having the money, because I buy into the vision. So one of the visions, it comes from Dan Snyder. It's shared by my colleague, Amir Syed, and it's what attracted me to want to get to know Dan and why I texted Amir back in April of 2024 saying, bro, can you introduce me to Dan? Is because Dan, Amir, and I all share in this concept that there is a way. We might need to find a way to yes, but there is a way to have the future of mortgage lending be a hybrid role. But we should know what the past has given us so that we can learn from the failures of others and maybe lean into the successes of others. So the first thing I want to lay out there when we talk about the hybrid originator, is there a place in this industry where someone could have 40 to 50% of their business coming from leads that are generated by their employer, and then 50 to 60% of their business being leads that generate on their own? How do we get there successfully, and how can we learn from those who failed? So first and foremost, a traditional bank is one in which, in their perfect world, they would have their originators be hybrid. Now, the difference is when you work for a bank, you would have X portion of your leads come from clients who already bank with you, referrals from the actual bank tellers or private bankers. And then a certain portion of your business will be business that you go out and generate on your own. But I would tell you, 20 plus years in this industry, where do banks and credit unions struggle? They struggle because typically you'll have originators who all they want to do is focus on their own book of business, and they don't want to work the bank branches. They don't want the leads that come in from the bank tellers. They're not going to work the servicing portfolio for the low-hanging fruit because it typically pays less. Or you have those that want nothing but the low-hanging fruit. They want nothing but doing the refis on the servicing portfolio. They want to rely on the private bankers and on the bank tellers for their leads because they're petrified and scared to go out and network themselves and build their own referral network. And banks typically, and if I was talking to a bank or consulting a bank, I would say y'all need to get caught up to times. Banks don't typically empower their originators to have their own personal brand. Banks don't empower typically. Now, I'm sure there are outliers and some that do. Originators to go online and network effectively or use social to sell effectively. And I think that there's a way for banks to step up to the 2020s and enter into the 2030s. They're going to have to do that. But we can look at banks as saying, okay, what has worked at banks and what hasn't worked at banks? Because technically, one could argue banks have been running the hybrid model for 20, 30 years now. Now, if we remove banks from the equation, no, most companies either run a consumer direct model or a pure retail model. And even if you're working at the same company, like at Lower is going to fund, let's say, $6 billion this year in volume. That makes us a top 25-ish lender. Of that $6 billion, I'm guessing about $1 billion of it comes from consumer direct. But of that consumer direct, that's being done in the consumer direct channel. It operates separately from the men and women that are doing the $5 billion in retail. The two don't currently commingle. But as Chris and I discussed, because he works for a company that's larger than Lower, but very similar. They do consumer direct really well. And there's a whole entire channel that does consumer direct really well. And then they do retail really well. But rarely do they actually commingle. What would it look like with them commingling? So that's where we're trying to go with the conversation. That's what Chris and I were talking about. But where we've been, please know that banks have been trying to do it. I don't know how successfully and congruently. Then the second thing is this, for people to know. If you've never worked in consumer direct and you're a retail originator, you're tuning in, you're thinking, damn, that'd be awesome. I'd love for my company to be feeding me leads. There are companies in our space, maybe some that are really involved in Major League Baseball, if you know what I'm talking about. Like they're really involved, like big time involved in Major League Baseball. That they have recruited over the past decade originators to come work for them. And like, come work for us. We're going to provide you leads. Mm-hmm. And then I don't know this firsthand because I've never worked for the company or worked with them. But I have friends who have. They said it was great in concept, but here was their feedback. The originators who were traditional retail loan officers quickly learned they don't want those internet leads. Those internet leads convert at a 2 to 3% conversion, whereas a retail lead, one you generate on your own, converts at a 15 to 25% conversion ratio. And it was a great concept, but it wasn't executed properly. So if we were to ever have a scenario where we had a hybrid LO, what does that look like? And that's, I think, what people are really going to dig out of the back half of today's show. Okay. But before I get started, do you have any questions for me? Are you picking up what I'm putting down? Have you followed me this far?
I mean, it makes sense, but it just sounds like there's highly specialized. Meaning, if you're getting fed leads in a database, you're not going to be really good face to face, shaking hands and like kissing babies. Generating leads that way. However, if you did have the freedom and autonomy to go generate your own business, the last thing you want is to be tied to a headset for 5 hours a day and you have to sift through these shitty internet leads. So understandable.
You're spot on. Like you are, if you're tuning in and you're contemplating this as your future, you need to know what the headwinds are. And those are 100% the headwinds. right? But I think that's where the hybrid and the marriage takes shape. And I think with the right people in charge and the right type of coaches, the right type of sales trainers, and the right systems and technology.
Yeah, is that the big part? Because you dabble with the C-level suite. Are those the conversations to be had to where, like, how can they leverage technology to make sure the internet leads convert at a higher clip? So, AI takes care of all, like, filters out all this stuff that, a call center LO would have to deal with. So by the time they do get that internet lead, it's been vetted and converts at a higher percentage. So they're just betting on, or they're waiting on technology to catch up with that. Is that accurate?
100%. 100%. And that's what we're going to get into. And before we do, I want to remind people, in 2008, the independent mortgage bank that we know today was not the most popular origination platform.
Why is that?
Right, in 2008, you had banks and you had brokers. You had banks and you had brokers. Independent mortgage banks were around, but the bulk of the volume through the beginning of the late 90s, early 2000s either came from a bank or it came from a broker. After the financial collapse, we saw the advent / popularity, the flocking to this independent mortgage bank. So that was just 15, 16 years ago. Okay, 15, 16 years ago. Like, think about this. When I onboarded at my previous employer, they were doing $400 million in volume. They now do $2.4 billion. In 2009, I dare you to look at what was Cross Country Mortgage doing in volume, what was Guild doing in volume, what was Movement doing in volume, what was NFM doing in volume. In 2009, you know what lower / Homeside was doing in volume? 0, because the company didn't exist. Company's only 10 years old. Company didn't even exist. Today, it's going to do 5-6 billion. Didn't exist. So when I share that and I talk about this hybrid originator, please know I may very well be like that guy or girl in 2005 talking about the independent mortgage banker being the future of mortgage lending. And y'all are like, you crazy. Okay, cool. Yeah, I could have been crazy. Maybe the independent mortgage banker only came about because of the financial collapse, because of the massive rescue, because so many banks took baths on their MBSs, right? Like maybe that was, and they de-risked and they licked their wounds and they said, never again will I go all in on mortgage the way that I did prior to the financial collapse. And the independent mortgage banker saw a void and they attacked it. But what I am saying is that, yes, just like you alluded to, John, we are getting ready to experience the greatest technological advancement over the next 3 to 5 years that we have seen in the past 20 years in terms of the rapid, impactful change that it's going to make. So with technology, here's what I know I can do. Okay, I know that I can go into a call center environment and I can teach them how to be a true advisor. I can give them access to Mortgage Coach. I can teach them how to do TCAs. All of a sudden, that presentation, way less of a commodity. That's a knock when you're a call center LO. It's like, oh, you're commoditized. And you are. That's the problem with being a call center originator. It's the problem with a home buyer using a call center, is that it's commoditized. Like, it's all about cheapest and fastest. Not best. Not the loan originator's going to close me on time, get my offer accepted. Nope, cheapest and fastest. But what if I could teach those call center originators how to leverage Mortgage Coach up front? What if I can start teaching them how to leverage technology and automation to proactively communicate to all parties involved, listing agent, buying agent, title company, and buyer? What if we start teaching them how to turn one transaction into 3? This is how I was coaching Chris the other night. Like, I was literally saying, Chris, you in a call center can very well get a home buyer on the phone, get them pre-qualified, figure out who the realtor is, call that realtor, introduce yourself, let the realtor know who you are, how to contact you, and that you will advocate like crazy to get their offer accepted. Make sure that realtor knows your cell phone number, right? Make sure they know how to email you directly. And as an employer, your employer can 100% support this if they want to. At the same time, when your borrower is going under contract, you can call the listing agent. And at that point, you can sell yourself, sell your buyer, on accepting your offer. And then once you have that done, that listing agent can now utilize your automation to, throughout the process, every status milestone, they're getting communication from you. You don't have to do it, Chris. You can get your CRM to do that. Text messages and emails all day long. You can then get your reviews. You can ask for referrals. And because of technology, you don't have to be in the same state to do a Zoom one-on-one. And if you're working in a call center environment, what if you could leverage some of those leads that are coming in that aren't attached to a realtor? And all of a sudden you can start leveraging relationships with those realtors in certain markets with leads. So like it can 100% be done. Now, in order to do so, Chris's employer is going to have to support him because maybe he's going to take an extra 15 minutes per file to make all the proper phone calls, to have all the proper conversations. They're going to need to equip him with the CRM that doesn't just work the lead. Because right now, you'll notice a lot of consumer direct, man, they love Salesforce. But Salesforce is all about working the lead itself. But what are they doing to cross-sell themselves to the buying agent, the listing agent? What are they doing to increase the lead conversion based on the experience that they're having? So I think it can be done. I think a good coach can coach the Chris's of the world and coach their divisional president or the company owner on how we can learn from what works in retail and teach it to those in consumer direct. Now, something we alluded to about 20 minutes ago, at some point, Chris may want to spend 8 hours a week actually trying to build his personal brand in his personal market. So this time Chris is in Detroit, Michigan. So if Chris wanted to spend 4 hours a week, I don't know, networking online, following our 30, 10, 5, 5, 3, 1, scheduling appointments with local real estate agents, local home builders, and then actually attending them, his employer would basically have to give him 1 day not in the call center, 1 day not doing his lead follow-up, 1 day not intaking new leads, because he's probably going to spend 4 hours one morning or afternoon doing all of his outbound appointment setting. And then he's going to spend another 4 hours actually attending the meetings that he scheduled. And probably 30 minutes a day, he's just going to want to do that intentional online networking. Now, that's for Chris, who's already working in a call center. What do I do for my traditional retail loan originators? How can the traditional retail originator operate more like consumer direct? I bet you're on to that question, aren't you, John?
Yeah, I can't wait. I know how they can do it. Pay me more on them shitty internet leads and I'll field them all day. But right now I'm making nickels on the dollar, so I don't want nothing to do with it.
Well, so I like what you said there, but here's where it takes me. That thought, that comment takes me to, why do traditional loan officers hate consumer direct? Mm-hmm. Because they don't know how to work those leads. They don't have the systems and the processes to filter them. And after spending just 1 hour calling 30 people who don't want to talk to you, who forgot they even submitted that piece of paper, or when you do pull their credit, it's a 480, or the name they gave you was Scooby-Doo and not John Coleman, then all of a sudden they're like, you know what, F this. If I'm going to spend an hour doing anything, I might as well spend an hour calling my circle of influence, getting the name and number of a recommended reputable home builder or realtor, calling that person, using the triangle of trust, like all the shit we teach and coach through the TLOP MLO coaching community, all the stuff we teach during LO launch. Rightfully so, that traditional LO is like, I just got to do more of that. F working internet leads. Cool. But what if you had a system in place where that internet lead was dumped into your computer, your AI, your virtual assistant that you pay $3 an hour to. Right. And all of a sudden text messages and voicemails and emails are going out and you don't have to get involved until the lead becomes a real human, because that human raised their hand and said, please engage with me. Mm-hmm. And what if you had a bot that was able to engage until you could do a live lead transfer, right? These are things, if you think 18, 36 months out, like, oh, let's find a way to especially if I could partner with a local real estate brokerage and collectively we could purchase these leads or generate these leads online and work them within my funnel using my AI, my virtual assistant. This is something that we could do. But most traditional LOs are like, F that. These leads suck. What a waste of time. The credit quality is terrible. I'm only converting at 2 to 3%. It's like, yeah, but what if we could, again, use technology? Now you increase your conversion to 8 to 12%. It may be worth your time. Okay, so like that's something I want them to think about. But let's just say we don't go that route of purchasing leads because we're never going to be a lead purchaser. Cool. You do have past clients. You do have referral sources. You do have circle of influence. Mm-hmm. And all of those people you should be connected with online, usually Facebook, Instagram, or LinkedIn. What are you doing today, whether it's $250 or $500 a month? What are you doing today to run ads to those people? Just those people. They already know you. They already like you. They already trust you. You're already their subject matter expert. But what are you doing to stay top of mind? More than likely, nothing. But what if you worked for a company? What if you worked for a branch? What if you, the owner of the company, went out and found the resources, and now all of a sudden, part of your marketing budget and part of your game plan wasn't to go out and find strangers to do business with you, but it was to get more from the people who aren't strangers. How do I get the people who already know me, who already like me, to refer me more, to call me more often? Well, keep showing up in their newsfeed. That's how you do it. So a way that we could hybrid, if I'm a traditional retail lender, how could I hybrid and do more that's consumer direct? Just that way. Now, some of you can do it organically in guerrilla, the way that Amir coaches, the way that we coach, and so many others are now coaching. You know, it's about your personal brand. It's about intentionally showing up online. It's about online networking, creating content, engaging in other people's content, sliding into their DMs. Like, sure, like that's an easy way that you can leverage your personal brand and social selling. But I'm talking about putting an ad spend behind. Those are things that you could legitimately do, because here's the deal. The guys and girls who are crushing on TikTok and Instagram, when you buy them a beer or two, when you see them late at night at that conference and you talk to them, those leads still take a lot of effing incubation.
A lot of massaging.
And so the sales cycle is longer and the conversion ratio is low. Now, if you're organically generating 100 leads and a 3% is converting, you're still getting 3 additional transactions that you weren't otherwise getting. But you have to look at the hours that you put into the content, the hours that you put into sifting through the leads to find the 3. And then you have to do an ROI, return on investment, as it pertains to your time, to figure out if that was worth it. But something that I could teach a retail originator to do is let's just start running ads to those people. Essentially like using your Google reviews, right? Using your website and putting a little bit of geocoding, geofencing, and even SEO love behind your website. Most of us as lenders, we have a website. Many of us, our company provided it for us. But I don't think we are doing anything to actually promote our website online. Like it's not showing up on the first page of a Google search. It's not in the top third. There's no real call to action on there, because for us, it was a placeholder. And maybe it'll always just be a placeholder. Or maybe someone will figure out how to support the modern loan originator by helping their branch or helping each individual LO with, maybe it's one of these. Hey, John, you're the branch manager and Kevin's your LO. My company, the company you work for, that we employ you, we will provide you the tools and the framework to actually market your website in your local community. So it shows up on page 1. We have the technology, we have the know-how, we have the experience, but it's your ad spend. That's a great partnership. But that's something right now that's not being done. So my short answer of, can we coexist in a world where a hybrid originator is a thing? I think yes. And I'm of the belief that 2030, those that are crushing it are going to be a hybrid. And it very well could be a consumer direct originator. Think about this. We did that event in Oklahoma, beginning of this year. An entire table was purchased from consumer direct. Okay, I'm a retail dude. I'm coaching, I'm speaking. This is a half-day loan officer sales summit. Shout out to Oklahoma MBA, by the way, and Carrick Draper and Mike David and that whole entire crew. That was a phenomenal time in Oklahoma earlier this year. But I was shocked when they had a whole entire table. But then I wasn't shocked when this is what they said during a break. They came up, introduced themselves, said, Dio, love the podcast, tuning in, etc. We're here because we have a younger originator who's only been in the industry for less than 2 years. He's crushing it. He's not only crushing it, his conversion's higher. He's getting his offers accepted. Because here's what my retail friends don't know. My retail friends, they bitch and complain about losing loans when their client went to a call center, went to an online lender. Mm-hmm. But do you know what the online lenders and the call centers bitch and complain about? When they got a lead, they worked it, but that person ended up using the loan officer who was local, who was referred by the realtor, right? So it goes both ways. It goes both ways, meaning, hey, traditional LOs, you win more than you lose. So get over yourself. It sucks when you lose someone to an online lender or a call center, but please know they're losing equally, if not more, to you. But nonetheless, this table in Oklahoma, what stood out was, long story short, one guy was standing out. One guy was doing things differently. One guy was having success outside of the normal success. And it all stemmed from that dude was implementing the shit we teach on the show. He was implementing the stuff that we coach to our students. He didn't know any different. He's just like, look, I'm a lender, I'm an LO, but what he was doing is things that weren't typically and traditionally done in a call center.
Why is that? Because call centers, do they traditionally operate like it's a numbers game?
It's a numbers game.
So numbers, I don't care what you're doing. I need you green time. Don't waste your time. Don't waste the company's time trying to generate all these other slapdick leads. I need you answering phones.
Yeah, up until now, recently, it was very much churn and burn, smile and dial. Smile and dial, churn and burn.
So you
Let's
got
go,
a number
baby.
quota to hit a day. If you don't hit the number, they pulled an office. Why didn't you hit your calls? I listened to your calls. You're not doing exactly.
Probably. Yeah. I've never worked in that environment, right?
That's what they do.
Yeah, I have friends that do. I have coaching students that do. So I know probably more than the average person, but I don't have the firsthand real world experience. But it was such a cool experience. An entire table, like they purchased an entire table to be at this event. Only because one guy, and it was Tuesday status update calls, literally calling the listing agent to introduce yourself before the offer was accepted. It was the most basic things that we teach and coach that the retail lenders should all be doing. If you're not, what's wrong with you? And if that's foreign to you, you definitely need a business coach and sales training. Okay. Yeah. But he was doing it. So that was just more fuel to my fire that it can be done. And I think it would be way easier to turn a call center originator into a hybrid than it ever would for me to take a retail originator and turn them into a hybrid, because they tend to be the most resistant to change. They're happy with who they are. They're happy with what they do, and they ain't changing. And by the way, they tend to be some of the best of the best. But if they want to stay relevant into the 2030s, they need to know that if they're staying the same, someone else is getting better, which means they're losing traction, which means that they, if you're not growing, you're what?
Dying.
You're dying. So they're dying while someone else is looking to slide in and take that market share. So my advice to any originator who's planning on originating for at least the next 7 to 10 years, if not the next 3 to 5, if you have longevity left and you want to be a part of the future, I think regardless of where you sit today, retail or you sit in the consumer direct, y'all all should be looking at how do you introduce the hybrid model. I think it can be done. I think we shouldn't be so ignorant that we're like, well, that one national lender, they didn't have the greatest success with it. And banks have been kind of hybrid for 25, 30 years, and they haven't quite had the best success with it in terms of someone, being hybrid. It's typically you're doing one or the other. I would share this. It took me 9 times of trying to quit using chewing tobacco before I finally quit. 9 times, right? How many other stories do we have? I love the WD-40 story, right? Why is it called WD-40? It was the 40th attempt. Took him 40 attempts to invent what he invented, that lubricant that we would spray on our bicycle chains or anything else that you'd use WD-40 for. So just because it didn't work 8 years ago, or it's not working in the best scenario, the way that maybe a big national bank operates it, it doesn't mean that we just give up on it. I think it might not work because the timing wasn't there. It might not work because if you're a big bank, you're like, bro, have you seen my quarterly profits? Have you seen my earnings? Like, it's working. It's working just like we need it to work. It might not be working the way that maybe I'd want it to work, but I'm not the head of that big national bank. Right. I don't own stock in that company, and my compensation isn't tied to it. So maybe the banks are super happy with the way it does. They're not looking for it to be any more efficient or any better. But for the rest of us who aren't a big national bank, yeah, I think we all have to be solving for what does a hybrid model look like. And that's mainly me speaking to the traditional retail people, saying, y'all, if you don't start trying to lean into this, I promise you the people over in Consumer Direct, they are going to start figuring out how to be more like you. You're going to have to start figuring out how to be more like them. And if you're running a company and you're ahead of a company and you want that company to continue to grow and be a part of the future of mortgage lending, you too should be figuring out how this hybrid's going to work in the future.
Well said, Dustin.
Yeah. So I appreciate Chris for his question. And who would have thought me taking a phone call at 6:30 at night, sitting in the Crunch Fitness parking lot, would lead to today's episode? But it is something obviously I'm passionate about.
I think that because that's how half of the content is created, Dustin.
More than half.
You at a red light, you talking to somebody.
You know, here's what's interesting. I share this with anyone who's willing to listen.
Okay.
The minute you make a conscious decision to get into content creation, you will realize that content is all around you.
Yep.
The more consistently you create content, the better you'll get, and the easier it'll be to come up with content. Content is all around you. There is a unlimited supply, or what the kids would call a plethora of content. You just have to open your eyes, open your ears, put your head on a swivel, and start doing it, and you'll be amazed at what comes about.
Play what the defense gives you. That's what my Jags and the UCF Knights have been doing all season, and that's why we have losing records.
Take what the defense gives you.
What'd I say?
You said play.
And that's sports ball.
And that's sports ball. And we don't even want to get into the Jags. I gave up on them a long time ago. I won't give up on my Knights, but holy
all you
cow.
have to do is give a quarterback $250 million and watch their career implode.
And on that note, no, seriously, y'all, thank you so much for tuning in. If you like what we're doing and you want more of us, here's how you get more. First and foremost, sign up for our newsletter. It's free. I write it. It comes out every Thursday. You sign up for it by visiting our website, tloponline.com. Subscribe to the YouTube channel. If you're listening on audio, we thank you. But please know there's even more content. There's playlists and additional training videos on our YouTube channel. That too is free. If you're looking for business coaching and sales training, the website, tloponline.com, will point you in the right direction. If you want to connect on anything else more specific, reach out to me directly. I'm highly accessible. First name Dustin, last name Owen. You can find me on LinkedIn. Sharing is caring. Please make sure you tell anyone and everyone that you think would benefit from content like this to tune into the show, subscribe to our podcast channel, sign up for our newsletter. And finally, if you want to get a hold of John Coleman, please
don't.
Exactly. Yeah. He's John Coleman. I'm Dustin Owen. That's all the time we have for you today. We do look forward to catching you on the next episode.